Okay, welcome back, guys. Welcome to my stock channel. We cover stock market technical analysis, and we're going to get right into it. So if you value the content that you're seeing, then go ahead and give me a thumbs up. Appreciate it. And if you're new, stick around, subscribe. You might learn something or might be able to actually make some profitable trades. All right, first thing I want to point out, this is my FinViz heat map, and it shows the S&P 500 broken out by sectors. And basically, what I want to point out is look at the narrowness of the price action today, of what actually happened. You had pretty much the entire S&P selling off in the red, and you had the FAANG stocks were the only ones catching any kind of a bid. So that the point is really narrow market. I mean, ultimately, you've got 5 stocks out of an S&P 500 that are weighted really heavily in the S&P 500 that are holding the market up. And when you have such a narrow breadth of market, then it's really easy to take that down. So when you have a lot of sectors rallying, that's a strong market. You have good strength. If one sector starts to weaken, another sector's strong. But if you have all the sectors weak except for 5 stocks, ultimately, and some semiconductors here, but for the most part, 5 stocks, then that is that ultimately that's a weak market. So doesn't mean it can't continue, but it does mean that it's just risky. All right, the probability is not in the favor that this market can continue without finding strength in some other sectors. Financials are weak. I mean, it's just interesting to see it this way. So just wanted to point that out. Let's move on to the charts. Look at what I'm seeing here. What do you know? This range, the purple range here in the NASDAQ futures, we watch the NASDAQ futures because tech is the only strength in this market. And so we want to understand if that weakness, if tech breaks, then the market breaks essentially. So here's this range that we got back here, and as you can see, look what happened today. Trading all day today. They popped it, trading all day back in there. End of the day, sold it off, broke down below, and closed below support again, as essentially the exact same close as yesterday. They did the exact same thing. So all day they're grinding higher. It's just grinding sideways, and then in the last hour, sell it back down below support. So they did that again. The futures closed back below support. So I'm not sure how many days we can hold up and how many days the market can continue to rally. Seems like we're going to need, if the market wants to rally or is going to rally, it seems like it's going to need a catalyst, because I think the momentum's really starting to shift. And you can see that. You can see just visually how the momentum was moving higher, and then all of a sudden we've just gone sideways. So the momentum's really shifted to flat from up. So not looking good there on the futures. We'll see how the market opens tomorrow. Triple Q's here. So Q's was the strongest because it's the FAANG stocks, 5 stocks. So Q's opened up and was trading a lot higher throughout the day, but opened up and closed about 0.5% higher. It's above this support zone I can find, 217, but I didn't have this marked out, and I probably should have. But if you look here, you can see right there, there's a support zone right there, trading range level, and it's about 218.50 or so, and looks like we closed pretty much right on it. So yeah, I mean, Q still held support, still was up. That's really all I have to say. I think we're gonna sell off. I think it's gonna gap down. And the reason why is Q's is strong, but then you look at the SPY, and SPY looks weak. And so when you have just one sector moving up, usually when you see a breakout or a move higher, you usually want to confirm Q's and SPY are both moving. And if you have both of those moving at the same time, that's usually a pretty good a pretty good rally or move, and especially if you have volume. If you have them, they're both moving and you have volume, then you can put a higher probability into that move. But look at SPY. Opened it up. They were trading kind of above this range and sold off, closed back within this range and back below 285.57, 286, somewhere right in there is that resistance. Closed, pretty well below it and down below it in the after hours as well. So that's that's a bearish close. This is not a good close for the SPY. So this says that we're going to move lower. And probably going to go down to this 280.50. Maybe we hold some support there. I think if we get back down to 280.50, we're going down to the bottom here, 272.56. And I think if we get down to the bottom, we'll have to see. I'm not going to make a call yet, but it just depends on what the rest of the charts look like. But possibly get down to this 264.37 and move lower. So we don't know. Moving on. XLV, you can pretty much see. This is just what I'm saying when I'm telling you momentum is fading. You've got strong upward momentum here, and then all of a sudden we hit this and just went sideways. The momentum's just pretty much hit a wall. So whether this can hold up, it's really interesting to see it just move sideways like this. But to me, it tells me it's going to break down. But ultimately, I think you want to see a break below $97. On an hourly close, a nice strong hourly close below $97 should set the momentum to the downside in XLV. So that's that. XLF, that's a really weak close there in XLF. Let's look at here. It's funny because I just looked at that chart for the first time since the market closed. So XLF is bearish. You've got the big strong breakdown and just not nearly the kind of rally that like tech has had. XLF has seen a really weak rally, and then we broke down. Here's your uptrend line right here on the hourly chart. We broke down, did some back tests, kind of recovered it, but ended up being a false breakout, and we sold off. And then look, I marked this out just today. You've got this support zone right here. Here's a level, here's a reaction, and then we had a couple reactions, and then you can see the close. Boom, closed below that support. That sets XLF in motion to start moving lower. So we've got, here's some levels you can look at. See if I can mark these out. You've got some gap, you got the gap right here, so I'd probably just say gap entry and gap fill. Probably right about there. I'm looking for multiple reactions around these trend lines, somewhere right in there. But here's the thing: if XLF starts to get down to these levels, I think we're undercutting the lows down here. It doesn't have any business being down at these levels again unless it's going to go lower. So I think that will be a magnet. You'll start to see selling pick up, and if XLF is moving lower, the rest of the market's not going anywhere. It might go sideways, but probably not going to go up. Apple. Let's see how Apple closed. Yeah, that's a pretty weak close. Not horrible, but look, you've got this uptrend line. I like my trend line. It seems to be the right trend line. The reason why is I've got it marked on the low here on the hourly chart, and we've got reaction here, reaction. We broke that right there, but instantly recovered it the very next day. So that just tells you that that was a valid trend line. See where it opened. Lots of reactions along that. And then see today, look at the candles. Reaction right to the trend line, closed right at the trend line, traded, broke, but recovered, and then broke. So we got some reactions around that trend line today. So there are traders looking at that trend line. We closed below this resistance right here at 301. Let's see where it's at. We'll just call it 375, closing at 363. So we closed below that resistance. And like I was saying in some of the other charts, look, you got this gap right here, and everybody sees this gap. It's a clear, it's a clear gap, and we're right there at gap entry. today. 303 is gap entry. So everybody is thinking, all the bullish people at least are thinking, okay, we're right there at the gap. We're going to run up and fill this gap at 310.65. And that's where the bulls are probably going to be looking to probably take some profit. That's what it looks like it wants to do, is run up and fill that gap. Well, when everybody's looking at one level, oftentimes you're not going to get that reaction. You're not going to go to that level because traders see that level, and people that are long are going to step in early and sell, and shorts are going to step in early and short. And so oftentimes you won't actually go to the gap. Everybody's looking at it. I think what actually happens now, I think we gap down. I think we gap down probably tomorrow, and probably a relatively big gap down, and we trap the bullish money. Because the thing is that this has been a bullish trend. It's been a very weak bullish trend, though, from my read, because look at this. Recently, the trend got a lot weaker. Look, when you're at the bottom of the trend, when you form the trend, the first bounce up to the very high, 20% to almost 21% to go all the way here, just with a big, huge gap, just a very impulsive move higher. Then we came back down, tagged the trend line again. That next time we tagged it, wrong tool. We moved up another 20%, big gap up, impulsive move up, it was gapping all the way up. Then we came back and tagged it again. Then look at the price action, grinding higher, no big gaps up, no impulsive moves up, just grinding along this trend line, along support, starting to break it, recovering it, battling with this support line right here. See how you can read that? See the price action? See how it looks different than down here? It's impulsive, big, huge moves to the upside. Same with here. This is different, all right? So that tells me momentum is shifting. Momentum is fading, even though the price is moving up. And if you just look at price and don't understand how to read charts, then you'll see that you would think this is bullish, and it is bullish, but it just tells me that it's fading. The bullishness is fading. So that's when you start to see that, then you start to be on the lookout for the counter move or a trend reversal. And that's why I'm shorting Apple. So, all right, guys, sorry, got interrupted with a phone call. So lost my train of thought, but I believe we were on this Apple chart. And the point that I want to make is my trend line looks good. We're getting reactions along that. And what I was saying, I think before, was the fact that I think that because everybody is looking at this gap right here, this gap is really obvious. And oftentimes when something's really obvious, you don't get the obvious in the market. It tricks people. So it tries to make it look like it wants to do something, and then it does the opposite. So what I think is going to happen, because you got a lot of longs looking to fill this gap, and that's a very obvious move that this just keeps walking up the trend line and then fills the gap. I think what happens actually is we gap down and trap the bulls. And another thing I want to point out in Apple is that the momentum has been shifting in Apple. And even though price has been moving up, see that the price along this trend line has been moving up, the momentum has been moving down. The momentum, it's been losing momentum. And the way that I read that is, look at the impulsive move right here off of the first reaction low. And look, we went all the way up to 20% move, to almost 21% move from this kind of trend line area up to the high right here. Then we came back and tagged support again. And then from there, we moved up really all the way up here, another 20%. And look at the moves, big gap ups, impulsive moves up. Gaps are always impulsive. And same with down here, a gap up. Here was another gap. Impulsive, strong moves up. Then we came back and tagged support again, tagged the trend line again. Now look at the move. Look at the trend line and look at the price action along this last kind of run higher. Just grinding along the trend line. No impulsive moves up, no big gaps. It's just been grinding along, and it's taken a lot of energy to try to continue to move up. So that's why I see momentum changing. It went from 20% moves up to a lot less. Actually, if you look at it, it's only 12 or 13% up, and it took a lot more effort to do it. So that's why I say momentum, I think, is waning, and we've got the gap here. Everything's set up kind of bullish, but at the same time, we're losing momentum. So that's why I think we gap down, or some sort of impulsive move down could happen during the market open, but oftentimes you'll get a gap down when to trap the bulls. So could be wrong, but that's what I read on that. We'll go ahead and move on. Delta, somebody wanted me to look at Delta. I thought I would look at maybe some of the airline stocks. I started to chart this one. I need to do a little bit more homework, but here's the thing. I see a support right down here on the hourly chart, running right around 21.85, and you look at the close today, sold off below that support. So I think the airlines look very weak. I think they got another leg down to go. So these things can easily go lower. And I think I was looking at some longer term. Let's see if I have it marked out. Yeah, down here. So possibly $9. If this is a bull, a bear market, you get kind of that flag right there. You got some flagging action, and then maybe make another impulsive leg down. I might be a buyer down around $9. I might be interested. I'm not really interested in them right here. Even though they've come down quite a bit, they can go down a lot more. So we'll see what the price action brings. We just started to get a breakdown right here. Not super impulsive, so we'll see. It could easily recover this tomorrow. Walmart looks weak. Look at the price action in Walmart. The thing that you want to just realize is you've got a big bearish rising wedge on the daily chart. Go ahead and mark that out if you want to follow along. Lots of reactions, reaction. Here's another reaction, and then the high reaction, and then a big cluster right here. See the reaction cluster? Nice pop above that failed. That tells me that held true. It's good to see the fake out moves. If you see a move above and it fails and it's a fake out move, that confirms that trend line. So that was good. Then we gapped up, held up here for a little bit, gapped down, creating an island top reversal, island cluster top basically. And that basically is just a cluster, a gap up, and then a cluster of kind of candles up in a little cluster area, and then a gap down, creating that top, that island cluster top. And look what happened. Let me go back to the hourly chart. Broke down, back test, fail. All right, starting to roll over. So tomorrow probably is a continuation to the downside. I'm looking for 118, and I'm looking, well, that's really what I'm looking for right now is 118. So we're just going to go ahead and leave it there. I think we'll get a reaction around 118. Okay, let's look at Tesla. I know lots of people are interested in Tesla. It's a wild card. Tesla can do some wild things. It's very volatile. So what I do, I'm short Tesla right now. I just took a short position just not too long ago, and I'm profitable on that trade. Not by a lot now, but at one down here I was up 15%. I'm looking for a little bit more though. I'm looking for gap fill. See the gap right here on the hourly chart? I'm looking for us to come down and fill this gap, and possibly undercut it, but at least fill. So looking to take profit right around gap fill at 650. And what I do to handle the volatility that Tesla can give you is I keep a smaller position size. So you need to keep a size that is relative to the volatility that a stock or an indice might see. I think that's prudent. That will keep you sane, and will also keep you in a trade as long as the chart is constructive. If your position's too big, you'll get flaked out of the trade. You'll get scared out of it if it goes against you too much. So even though the chart might still look constructive, oftentimes just the psychological impact of the losses will scare people out of trade. So better to keep a size that you can manage. That's important. Here's your level on Tesla. It actually closed above right there. 780.56 is what I got. And it closed slightly above that. Looks like, what's the after hours? Yeah, just slightly above it. So I can't say that's it's kind of neutral. We pretty much closed right on it, just slightly above it. So, and for a $780 stock, a couple pennies or even a couple bucks is pretty much flat. So this is not bearish or bullish. It's just flat right now. We're flat on this trend line. So tomorrow, do we break up? Do we break down? Time will tell. But, you know, if you look at the futures, they broke down right here. So that tells me the futures are going to sell off overnight, and that will have an impact on Tesla. So that's what I see there. Let's wrap up with Bearish. Look, my trend line is accurate on this one as of right now, at least. 28.17 on the hourly chart. Where do I get this? Well, if you go back to the daily or even the weekly, you can find it on the weekly. But if you roll out and you look, we had lots of reactions going all the way back to 2006. Here's lots. Look at all these reactions that you get. Where it was kind of holding a support. It held. So it was, you know, it did undercut it lots, so it doesn't quite give you that level. But as you learn more and more as time went on, it gives you that. It gives that level up. Look right there, held it, you know, and then the last time it really tested it was right here, and there it is. You can see it perfectly held that level. So that's how it gives you that level. It tells you that there's something right here, and then when you go back, you can see that there was a lot more reactions along that level. So if we move into the hourly chart to see what's going on, you can see that we reacted around that just today. Sorry, my chart is flipping out on me. Right there. You can see basically came right up to it, 28.20, back tested again. That's a double top. So here's a top on the hourly chart, and then we sold off, had a pretty good sell-off today, and looks like there's a little bit more selling in the after hours. So what am I looking for? Well, I've got it marked out in purple. I don't know if we're going to get down here, but I think this is a buy range in this area, 22.50 down to 21.50, kind of that dollar range. Where do I get that level from? Well, if you go to the daily again, you can see right there, that was your reaction. There's a gap right here on the daily back in 2013, and it held as resistance right here, resistance, lots of reactions, and you know, it was resistance right in here as well. So I think that's the range, and also right here you can see it was resistance right here as well. So that's the range. I think we come back down and just tag that. That should hold the support, and then we make our way higher. So that's what I'm looking at. Don't front run me on that one. All right, guys, that's all I got for the video. Just trying to give everyone what I'm reading. Of course, I have a bearish bias on this market, but I have data to back it up. I see things in the chart that tells me that is where the market wants to head. So I am viewing it that way. And I continue to see confirming action. I mean, when you look at the NASDAQ futures, when you look at the S&P 500, you know, this overshoot and failure, this is giving you confirming action that the market doesn't want to move higher from here. So if it's going to move higher, we probably need some sort of catalyst. We need some sort of pump catalyst that's going to pump it past this range. And if we don't get that, we're probably going to get some selling. So that's it, guys. Let me know what you guys think. Give me a thumbs up if you find value, and I'll catch you guys on the next video. I'll probably try to put out a airline specific video and maybe cruise line, just to talk about some of these really damaged stocks, and we'll continue from there. So thanks, guys. Appreciate it. Give me that thumbs up. Bye.